Have you ever stopped to think that the biggest barrier between you and wealth can be your mentality? That's right. Before you make money, you need to transform your way of thinking. If you want to build wealth consistently and sustainably, it is essential to understand how to cultivate a growth-oriented mindset. And it doesn't stop there. If you choose the right career, know how to innovate in entrepreneurship and invest intelligently, the opportunities will be unlimited. In this video, we'll explore how a successful mindset can change your life, how to choose a career that really maximizes your earnings, and even how to build an innovative business that generates impressive returns. In addition, I'll show you how to diversify your sources of income, make the right investments, and how the digital age opens incredible doors to create wealth. Prepare for a full journey toward financial freedom, where success is not just a possibility, it's a reality within your grasp. So leave that like and subscribe now in our channel. And let's get started. Wealth mindset, the basis for building heritage. The wealth mentality is the essential starting point for any journey of financial success. Many people underestimate the power of thoughts and beliefs about money, but the reality is that how you view wealth determines your actions and results. Having a growth mindset means being willing to learn, adapt, and take calculated risks. Those who cultivate a mindset of abundance believe that there are always opportunities to grow, regardless of economic circumstances or personal challenges. Developing the right mindset. To begin, it's important to adopt a problem-solving mindset. Successful people see obstacles as challenges to be overcome, not as insurmountable barriers. This positive outlook helps you stay motivated and find new approaches to difficult situations. In addition, the wealth mindset involves setting clear goals and focusing on actions that create long-term value, rather than just seeking immediate gains. Overcoming internal limitations. Another crucial aspect is recognizing and overcoming limiting beliefs about money, such as the idea that money is the root of all evil, or that only privileged people can be rich. These perceptions can hinder your financial progress. By identifying and challenging these beliefs, you create space for a new perspective, one that is more open and confident about your own ability to build wealth. Continuous learning and personal growth. The wealth mindset also requires a dedication to continuous learning. Whether it's reading financial books, attending workshops, or following business leaders, seeking out new information is essential. This practice expands your knowledge and prepares you to make smarter, more informed choices. People with this mindset see mistakes as lessons and are not afraid to fail, as they understand that failure is part of the path to success. Visualization and self-affirmation. Practices such as visualization and self-affirmation can be used to reinforce the wealth mindset. Visualizing your financial goals achieved helps you stay focused and motivated, while positive affirmations build self-confidence. Repeating phrases such as, "I am capable of creating opportunities and prospering," may seem simple, but it has a profound impact on how you respond to daily challenges. Results of a wealth mindset. When you develop a wealth mindset, your actions begin to reflect this change. You become more likely to invest in yourself, whether through classes, networking, or exploring new business ideas. In addition, you begin to see everyday situations with an entrepreneurial eye, identifying opportunities where others see problems. This approach transforms the pursuit of wealth into an ongoing, proactive process that relies on self-confidence and resilience. The first key to building wealth quickly is to cultivate a mindset that opens the door to growth, creativity, and resilience. Identifying and seizing high-potential opportunities. The ability to identify and seize high-potential opportunities is a vital skill for anyone who wants to build wealth quickly. In a world that is constantly evolving, successful people are those who can see beyond the obvious, spotting new trends and market needs before most. This skill, although it may seem innate, can be developed with practice, study, and a strategic approach. Stay aware of market trends. One of the first steps to identifying high-potential opportunities is to stay informed about what is happening in the world. Keeping up with the news, studying market reports, and observing consumer behavior are essential practices. Emerging industries such as artificial intelligence technology, renewable energy, e-commerce, and digital health often present excellent opportunities for investors and entrepreneurs who get in early. Networking, a path to new perspectives. Maintaining a diverse network of contacts is an effective way to expose yourself to new ideas and insights. Talking to experts in different fields can open your mind to opportunities you might not have considered. Attending conferences, business meetings, and online discussion groups can help you expand your network and understand how different industries are developing. These interactions can often lead to profitable collaborations and partnerships. Problem and solution analysis. Many of the best opportunities arise from identifying common problems that have not yet been solved. Successful people cultivate a keen eye for the pain points that consumers and businesses face. Once a problem is recognized, the next step is to find an innovative and efficient solution that can be commercialized. This could result in the creation of a new product, service, or even a more efficient approach to an existing process. Thinking outside the box. Innovation and creativity. Innovation is a crucial element in turning opportunities into wealth. This does not necessarily mean creating something completely new, but it can involve improving something that already exists. Big companies like Uber and Airbnb did not invent the concept of transportation and accommodation, but rather revolutionized these sectors by introducing disruptive business models. Thinking outside the box and challenging conventions allows you to stand out in a crowded market. Ability to make quick decisions and take risks. When it comes to seizing an opportunity, speed of execution matters. The market rewards those who act before the competition realizes the possibility. However, it is essential to balance haste with careful analysis to ensure that the decision is informed. Taking calculated risks is an inherent part of this process. You need to be prepared to deal with uncertainty and potential failures, but with a strategy to mitigate damage. Use data and technology to support decisions. Leveraging data analytics and technology tools can give you a significant advantage in identifying high-potential opportunities. Trend analysis software, market research platforms, and artificial intelligence can help you predict behavior and identify promising niches. Armed with the right tools, you can base your decisions on hard data and reduce the risk associated with new ventures. Practical examples. Success stories such as Jeff Bezos, who anticipated the potential of e-commerce and founded Amazon, or Elon Musk, who invested in sustainable technologies with Tesla and SpaceX, illustrate how identifying and investing in innovative opportunities can result in significant wealth. Even on a smaller scale, entrepreneurs who identify an underexploited niche in their communities can build profitable businesses with significant impact. Identifying and seizing high-potential opportunities requires a combination of market acumen, creativity, speed, and willingness to take risks. Developing these skills puts you ahead of the competition and allows you to turn good ideas into sources of sustainable wealth. Effective financial planning and strategic savings. Effective financial planning is a fundamental foundation for those seeking to build wealth quickly and sustainably. Without a solid financial strategy, even the greatest gains can be wasted. Therefore, understanding and applying effective personal and business finance management practices is essential to accumulating and maintaining wealth over time. Create a detailed budget. The first step to effective financial planning is to create a detailed budget. This involves carefully analyzing all your income and expenses, categorizing them into essential and non-essential. The goal is to have a clear view of how money is being used, identify where there is waste, and reallocate resources to areas that provide a higher return. Maintaining a strict budget helps to discipline spending habits and directs more money towards investments. Set realistic financial goals. Setting short, medium, and long-term financial goals is crucial to maintaining focus and motivation. These goals can range from building an emergency fund to acquiring assets that generate passive income, such as real estate or investing in stocks. Clearly defined goals allow you to create a detailed plan for how to achieve them, helping you stay disciplined and track your progress over time. Save smartly and consistently. Saving a significant portion of your income is a practice that results in lasting results. The ideal is to adopt the pay-yourself-first strategy, which consists of setting aside a fixed percentage of your monthly income for investments before any other expenses. This approach creates a savings habit and ensures that capital accumulation becomes a priority. Investing consistently in a variety of financial vehicles is what turns savings into a wealth-building mechanism. The power of compound interest. Compound interest is one of the most powerful tools in the process of accumulating wealth. Considered by Albert Einstein as the eighth wonder of the world, it works in favor of the investor by making income grow exponentially over time. Investing in mutual funds, growth stocks, or even private pension plans that benefit from compounding interest are examples of how to take advantage of this power in your savings strategy. Diversifying investments to reduce risk. Efficient financial planning involves diversifying investments to mitigate risks and maximize returns. Concentrating all resources in a single type of investment increases vulnerability to significant losses. Distributing capital across different asset classes, such as stocks, fixed income securities, real estate funds, and even cryptocurrencies, helps balance the portfolio and protects against market volatility. This strategy ensures that, even if one sector suffers a decline, other parts of the portfolio can compensate for the loss. Constant monitoring and review of the plan. An effective financial plan is not static. It should be reviewed periodically to ensure that it is in line with changing personal circumstances and the economic landscape. Reviewing your financial plan regularly allows you to make adjustments to improve efficiency, adapt to new investment opportunities, and correct any deviations that may be hindering progress toward your financial goals. Inspiring examples of successful financial planning. Many successful individuals, such as Warren Buffett, have followed rigorous planning and savings principles to amass great fortunes. Buffett, known for his frugal approach and long-term investment strategies, exemplifies how consistency and patience can turn a solid financial strategy into a multi-million-dollar fortune. Even on a smaller scale, many entrepreneurs and ordinary workers who adopt smart savings habits and careful planning are able to build considerable wealth over time. Effective financial planning and strategic savings are essential for anyone who wants to accumulate wealth quickly. A disciplined and informed approach, based on clear goals and proven strategies, allows anyone to build a solid and secure financial future. Applying these principles early on can make all the difference between simply surviving financially and achieving financial freedom and prosperity. Investing in assets that generate passive income. Investing in assets that generate passive income is one of the most effective strategies for building wealth consistently and lastingly. Passive income allows your money to work for you, generating continuous earnings without the need for active daily effort. This approach creates an additional source of income that can accelerate capital accumulation and provide greater financial security in the long term. The concept of passive income. Passive income is the money a person earns from investments that require little or no effort to maintain. Unlike active income, which depends on constant work, passive income flows regardless of the amount of time dedicated daily. This type of income can be obtained through different types of investments and is essential for those seeking financial independence and economic freedom. Real estate investment. One of the most traditional paths to generating passive income is investing in real estate. Buying properties to rent out can create a steady stream of monthly income, while the asset value still has the potential to appreciate over time. In addition to residential rentals, commercial and industrial properties also offer good opportunities, often with longer lease terms and higher financial returns. Real estate investment trusts, REITs, are another option that allows investors to participate in the real estate market without having to deal directly with property management. Stock dividends. Investing in shares of companies that pay dividends is a popular way to earn passive income. Many companies distribute part of their profits to shareholders on a periodic basis, which can mean quarterly or annual payments that supplement income. The advantage of this type of investment is the ability to reinvest the dividends, further increasing the stake in the company and, consequently, the income received in future periods. Fixed income investments and income funds. Fixed income securities such as bank deposit certificates, CDBs, government bonds, and debentures are examples of investments that provide predictable income. They are ideal for those who prefer a lower risk approach and want to ensure a constant return. Investment funds that focus on generating income, such as fixed income funds and multi-market funds, can also offer regular returns, although it is important to analyze the administrative fees and risks associated with each option. Intellectual property royalties. Royalties obtained from patents, copyrights of books, music, and other creative products are also a form of passive income. Creating a product or content that can be licensed is a way to earn long-term profits without the need for ongoing effort. Authors, musicians, and inventors who can monetize their creations can receive recurring payments without having to produce new works repeatedly. Investments in automated businesses. Online businesses that do not require a physical presence or direct operation are another modern way to generate passive income. This includes affiliate websites, online courses, and apps that sell digital products. Once established, these platforms continue to generate sales and revenue without the need for constant intervention. For example, a well-structured online course can be sold for years after its creation, generating a steady stream of income. Cryptocurrencies and staking. With the advancement of blockchain technology, investments in cryptocurrencies can also generate passive income through staking. Staking is the process of holding cryptocurrencies in a digital wallet to help sustain the operation of a blockchain, receiving rewards in return. It is important, however, to study the platforms and cryptocurrencies involved in detail, as this market can be highly volatile and involves risks. Importance of diversification. Diversifying investments across different types of passive income-generating assets is crucial to reduce risk and increase the stability of earnings. Betting on just one source of passive income can limit results and expose the investor to losses if that specific area faces problems. Having a diversified portfolio ensures that even if one source of income is impacted, others will continue to offer returns. Investing in assets that generate passive income is a powerful strategy for building wealth efficiently and independently of daily time or effort. Creating a diversified portfolio with assets of different natures ensures a safer income stream and allows for greater financial peace of mind. The focus should be on finding options that align with your investment objectives and risk profile, maximizing return opportunities and ensuring a stable financial future. Entrepreneurship with innovative and disruptive ideas. Entrepreneurship with innovative and disruptive ideas is one of the most effective and exciting strategies for building wealth quickly. This path requires not only a differentiated vision, but also the ability to execute ideas that challenge the status quo and offer something new and valuable to the market. Many of the world's greatest fortunes were built by entrepreneurs who were able to identify gaps in the market and propose creative solutions that revolutionized entire sectors. The concept of disruptive innovation. Disruptive innovation is a term popularized by Clayton Christensen and refers to the creation of products or services that start in niche markets but end up transforming or even replacing traditional offerings. These innovations often start as more affordable options or alternatives with unique features that appeal to a new customer segment. As these ideas gain traction and quality, they challenge incumbents, dramatically changing the way the industry operates. Real-world success examples. Some of the most iconic examples of successful disruptive innovation entrepreneurs include Steve Jobs with Apple, who changed the way we view technology and entertainment; Elon Musk, who with Tesla transformed the automotive industry with high-performance electric cars; and Jeff Bezos, who started Amazon as a simple online bookstore and expanded it to become one of the largest e-commerce and cloud services empires in the world. The importance of identifying opportunities. To undertake innovative ventures, the first step is to identify unsolved problems or improvements that can be made to existing products and services. This requires in-depth market research and the ability to observe emerging trends. The entrepreneur must be a keen observer and have the ability to anticipate consumer needs, often before they even realize those needs. Calculated risk-taking. Entrepreneurship with disruptive ideas is inherently risky, but it is the ability to take calculated risks that sets great innovators apart. Successful entrepreneurs know that failure is part of the process and are willing to learn from mistakes to improve their proposals. Prototyping, using feedback to adjust strategy, and the resilience to keep trying are crucial factors in transforming an idea into a profitable venture. Innovation with technology and startups. The digital age has been fertile ground for disruptive entrepreneurs. Technology startups, such as fintechs and health techs, are disrupting traditional sectors with faster, more accessible and personalized solutions. For example, financial services platforms are democratizing access to loans and investments, while healthcare apps are offering real-time and remote medical services. Fundraising and initial investment. Having an innovative idea is just the beginning. the entrepreneur needs to have a plan to finance and expand the operation. Many successful startups started with personal financing and quickly attracted angel investors or venture capitalists who believed in the vision and growth potential of the project. Knowing how to present your product convincingly, demonstrate the viability of the business, and show a scalable model are important aspects to secure the support of investors. A culture of innovation and creativity. Fostering a culture of innovation and creativity is essential for the success of any disruptive business. Motivated teams that have the freedom to propose new ideas and innovative solutions are often the driving force behind major changes. Fostering an environment where experimentation and diversity of thought are welcomed helps companies stay ahead of the competition and remain relevant in the market. Emerging examples and new areas of exploration. Currently, new areas such as artificial intelligence, blockchain, renewable energy, and biotechnology represent great opportunities for innovation. Entrepreneurs who explore these fields with practical and efficient solutions can stand out and build highly profitable businesses. For example, AI startups that help optimize processes in companies or initiatives that use blockchain to track the supply chain are rapidly gaining ground. Entrepreneurship with innovative and disruptive ideas can lead to exponential wealth creation and, at the same time, make a significant impact on society. Although the path is full of challenges and demands creativity, determination, and the ability to deal with uncertainty, the rewards can be enormous. By identifying a real need, developing an effective solution, and persisting until the idea gains traction, entrepreneurs can transform not only their financial lives, but also the market in which they operate. Smart and diversified investments. Investing in a smart and diversified way is one of the fundamental strategies for building wealth in a sustainable and safe way. This approach involves investing resources in different types of assets that can generate financial returns over time, taking advantage of the power of compound interest, asset appreciation, and diversification to minimize risk. The importance of diversification. Diversification is a practice that protects investments from excessive risk. Instead of putting all the capital in a single asset or market, the investor distributes his portfolio across different classes, such as stocks, bonds, real estate, and mutual funds. The logic behind the strategy is that if a specific sector performs poorly, other sectors can still generate profits, balancing the portfolio. This method reduces overall volatility and increases the probability of positive returns in the long term. Different types of investments. Investments can vary widely in terms of risk and return. Among the most common options are stocks. Investing in company stocks allows you to become a shareholder and participate in the profits through dividends or the appreciation of the share price. This type of investment can be volatile, but historically it has offered high returns over time. Index funds, ETFs are an affordable way to invest in a basket of stocks or bonds that track a specific index, such as the S&P 500. They offer immediate diversification and lower costs compared to buying individual stocks. Real estate. Investing in property is a traditional strategy that can generate passive income through rentals and long-term appreciation. Although it requires a higher initial capital, real estate has the advantage of being a tangible asset and is often less volatile than financial markets. Fixed income and bonds. For those seeking more security, government bonds and other fixed income assets offer more predictable returns. These investments are ideal for diversifying your portfolio and protecting yourself in times of economic uncertainty. Cryptocurrencies and digital assets. Although riskier, investments in cryptocurrencies such as Bitcoin and Ethereum have gained popularity due to their potential for explosive appreciation. However, it is important to study the market well and allocate only a small portion of your portfolio to this type of asset to avoid major losses. The power of compound interest. Albert Einstein is said to have said that compound interest is the eighth wonder of the world, and this statement reflects the power of this concept. When you reinvest the earnings from your investments, they begin to generate returns on their own profits, creating a snowball effect. Even small investments, if maintained long enough, can turn into large sums thanks to the power of compound interest. Strategies for investing wisely. To invest intelligently, it is essential to have a well-structured plan that considers your financial goals, time horizon, and risk tolerance. Beginner investors should focus on learning the basics, such as market analysis and understanding risk, while more experienced investors can explore more sophisticated strategies, such as leverage or derivatives trading. An important step is to stay up to date on economic trends and changes in the global financial landscape. Taking a proactive approach, where adjustments are made as needed, helps ensure that the portfolio is always aligned with long-term goals. Importance of consulting experts. For those who feel insecure about making decisions on their own, consulting a financial advisor or taking investment courses can be a valuable solution. Professionals can help build a diversified portfolio and suggest strategies that maximize returns while minimizing risks. Current trends and opportunities. With the digitalization of the financial market, new opportunities have emerged, such as investments through apps, fintech platforms, and financial technology startups. These innovations have made access to the financial market more democratic, allowing ordinary people to invest with just a few clicks. In addition, technologies such as blockchain are creating new avenues for investments in decentralized assets and smart contracts, further expanding the range of possibilities. Investing intelligently and diversified is not only a strategy for building wealth, but also a way to protect capital and ensure sustainable financial growth. With the right knowledge, patience, and a well-structured plan, anyone can start investing and reap the benefits of a diversified portfolio. Therefore, studying the available options, keeping up with trends, and maintaining a disciplined approach are essential steps to achieving financial success. Entrepreneurship with creativity and innovation. Entrepreneurship in a creative and innovative way is one of the most exciting and effective ways to build wealth quickly. This approach not only allows you to create a business with the potential for exponential growth, but also promotes differentiation in the market and the building of a legacy. However, success in this area depends on a number of essential factors, from identifying a unique opportunity to effective execution. Identifying opportunities in the market. The first step to entrepreneurship in an innovative way is to identify gaps and opportunities in the market. This involves observing unmet consumer needs, emerging trends and problems that can be creatively solved. Great entrepreneurs like Steve Jobs and Elon Musk began their journeys by identifying areas that could be revolutionized, whether with innovative technology, new business models, or products that would improve the customer experience. This ability to perceive and anticipate what the market needs is an important differentiator for successful entrepreneurs. Innovation as a competitive differentiator. Innovation goes beyond simply creating something new. It's about adding value in a way that no one else is doing. This innovation can manifest itself in products, services, or even processes. Companies that stand out for their innovation, such as Tesla, Amazon, and Uber, have redefined entire industries, showing that thinking outside the box is crucial to success. Creating a product or service that stands out from the competition through technology, design, or user experience can be the key to establishing yourself as a market leader. Disruptive business models. Adopting disruptive business models is another effective way to undertake creatively. Disruption occurs when a business model is so different from the conventional that it ends up completely transforming the industry. For example, platforms like Airbnb and Uber did not create better hotels or taxis. Instead, they changed the way people access these services, democratizing the market and introducing new forms of consumption. Therefore, thinking about how to offer products or services in a more accessible, efficient, or personalized way can be the key to creating a business with high growth potential. Using technology to support entrepreneurship. Technology is a central pillar for any business that seeks to be innovative. With the advancement of areas such as artificial intelligence, big data, e-commerce, and blockchain, entrepreneurs have at their disposal an arsenal of tools to improve their products, better understand consumer behavior, and optimize processes. Data analysis applications, automation platforms, and digital marketing allow entrepreneurs to understand their customers' preferences and respond quickly to market changes. The adoption of technology can not only increase business efficiency, but also provide a differentiated and personalized experience for the customer. The importance of networking and collaboration. Entrepreneurship is not a path that needs to be walked alone. Participating in entrepreneurial communities, business fairs, startup events, and mentoring networks can provide opportunities for collaboration that leverage business success. Exchanging ideas, seeking strategic partnerships, and learning from the mistakes and successes of other entrepreneurs help to expand one's vision and innovate with greater confidence and foundation. Flexibility and adaptation. Another key point when undertaking innovative ventures is the ability to adapt. The market and consumer preferences change rapidly, and successful entrepreneurs know how to adjust their strategies as needed. Startups that started with an idea and pivoted to a different approach after better understanding market demands, such as Instagram and Slack, are classic examples of how flexibility can be key to success. Being able to change course, test new ideas, and learn from feedback can determine the longevity and profitability of a venture. Challenges and risks of innovative entrepreneurship. Although the rewards can be significant, undertaking creative and innovative ventures also involves considerable risks. Uncertainty about market acceptance, the need for initial capital, and competition are obstacles that need to be carefully planned. However, with good market analysis, risk mitigation strategies, and a resilient mindset, these challenges can be overcome. Successful entrepreneurs know that failures are learning opportunities and that persistence and passion for the project are essential to stay focused in difficult times. Undertaking entrepreneurship with creativity and innovation is one of the most promising paths to creating wealth quickly and sustainably. By identifying opportunities, adopting disruptive models, using technology to their advantage, and maintaining a flexible and collaborative mindset, entrepreneurs can stand out and transform ideas into successful businesses. This approach requires effort, continuous learning, and adaptability, but it can result in profound impact and an upward financial trajectory. Investing in assets with exponential growth potential. Investing in assets with high appreciation potential is one of the most effective ways to build wealth quickly. This method is ideal for people who want to multiply their capital without necessarily having to get involved in the day-to-day operations of a business. However, for this strategy to be successful, it is essential to have a solid understanding of the markets and be able to identify promising investment opportunities. Innovation as a competitive differentiator. Innovation goes beyond simply creating something new. It's about adding value in a way that no one else is doing. This innovation can manifest itself in products, services, or even processes. Companies that stand out for their innovation, such as Tesla, Amazon, and Uber, have redefined entire industries, showing that thinking outside the box is crucial to success. Creating a product or service that stands out from the competition through technology, design, or user experience can be the key to establishing yourself as a market leader. Disruptive business models. Adopting disruptive business models is another effective way to undertake creatively. Disruption occurs when a business model is so different from the conventional that it ends up completely transforming the industry. For example, platforms like Airbnb and Uber did not create better hotels or taxis. Instead, they changed the way people access these services, democratizing the market and introducing new forms of consumption. Therefore, thinking about how to offer products or services in a more accessible, efficient, or personalized way can be the key to creating a business with high growth potential. Using technology to support entrepreneurship. Technology is a central pillar for any business that seeks to be innovative. With the advancement of areas such as artificial intelligence, big data, e-commerce, and blockchain, entrepreneurs have at their disposal an arsenal of tools to improve their products, better understand consumer behavior, and optimize processes. Data analysis applications, automation platforms, and digital marketing allow entrepreneurs to understand their customers' preferences and respond quickly to market changes. The adoption of technology can not only increase business efficiency, but also provide a differentiated and personalized experience for the customer. The importance of networking and collaboration. Entrepreneurship is not a path that needs to be walked alone. Participating in entrepreneurial communities, business fairs, startup events, and mentoring networks can provide opportunities for collaboration that leverage business success. Exchanging ideas, seeking strategic partnerships, and learning from the mistakes and successes of other entrepreneurs help to expand one's vision and innovate with greater confidence and foundation. Flexibility and adaptation. Another key point when undertaking innovative ventures is the ability to adapt. The market and consumer preferences change rapidly, and successful entrepreneurs know how to adjust their strategies as needed. Startups that started with an idea and pivoted to a different approach after better understanding market demands, such as Instagram and Slack, are classic examples of how flexibility can be key to success. Being able to change course, test new ideas, and learn from feedback can determine the longevity and profitability of a venture. Challenges and risks of innovative entrepreneurship. Although the rewards can be significant, undertaking creative and innovative ventures also involves considerable risks. Uncertainty about market acceptance, the need for initial capital, and competition are obstacles that need to be carefully planned. However, with good market analysis, risk mitigation strategies, and a resilient mindset, these challenges can be overcome. Successful entrepreneurs know that failures are learning opportunities and that persistence and passion for the project are essential to stay focused in difficult times. Undertaking entrepreneurship with creativity and innovation is one of the most promising paths to creating wealth quickly and sustainably. By identifying opportunities, adopting disruptive models, using technology to their advantage, and maintaining a flexible and collaborative mindset, entrepreneurs can stand out and transform ideas into successful businesses. This approach requires effort, continuous learning, and adaptability, but it can result in profound impact and an upward financial trajectory. Investing in assets with exponential growth potential. Investing in assets with high appreciation potential is one of the most effective ways to build wealth quickly. This method is ideal for people who want to multiply their capital without necessarily having to get involved in the day-to-day operations of a business. However, for this strategy to be successful, it is essential to have a solid understanding of the markets and be able to identify promising investment opportunities.